The annexation of the Crimean region of the Ukraine by Russia, as a result of what is being described in the West as an illegitimate referendum held last month, could end up costing President Vladimir Putin and the rest of Russia more than it ever imagined. The Russian stock market is already down more than 11% since the drama unfolded, wiping out billions in market capitalization, while the fall in the ruble has pushed the Russian central bank into increasing rates by 150 basis points, from 5.5% to 7%. In response to Russian aggression, Western powers, led by the United States, imposed sanctions against prominent Russian officials and lawmakers, as well as a handful of billionaires close to Putin. The European Union, by contrast, issued its own sanctions, although somewhat less aggressive, against members of the armed forces. Germany has led the Eurozone charge on sanctions against Russia, reportedly coordinating the next phase of sanctions behind the scenes, after suspending licenses for arms sales to Russia and suspending a planned $1 billion satellite technology deal. German Chancellor Angela Merkel hasn't minced words and stated that unless Vladimir Putin steps back from the Ukraine, she's prepared to back European sanctions that would cause massive economic and political harm to Russia. Any Russian retaliation could hit Germany the hardest, as it is Russia's biggest European trading and investing partner. Some 6,000 German companies, most of them small to mid-size operations, do business in Russia, selling everything from pharmaceuticals to cars to machine tools. So far, German business leaders are standing firmly with Merkel, but with some 300,000 German jobs dependent on economic exchange with Russia, their resolve may soften over time. Moscow could retaliate against them by seizing their assets or restricting their activity in Russia. Another risk is that Russia could scale back natural gas supplies to Europe and ruin chances for foreign companies to win lucrative Russian contracts. The Ukrainian crisis is coming at a bad time for the Russian economy, which faces fundamental problems as the growth rate in 2013 was the lowest in 13 years after a slump in 2009 caused by the global financial crisis. The sanctions threatened to tip the $2 trillion economy into recession after sagging investment last year constrained growth to 1.3%, the slowest pace in some 4 years. Chief among investors' concerns are that the sanctions could be escalated to affect trade, particularly in the valuable energy sector. Europe is Russia's largest trading partner, and it buys more than 3/4 of Russia's crude oil and natural gas exports, which funds about half of the Russian government's budget. In the first quarter of 2014, the Russian economy expanded just 0.8%, far short of the earlier prediction of 2.5%. The ruble has lost almost 9% against the US dollar in the first 3 months, making imports more expensive, while spooked investors pulled about $70 billion out of the country, some 3.2% of GDP, more than in all of 2013. This has caused the ruble to have the second worst performance among 24 emerging market currencies after the Argentine peso. A threatened broader set of economic sanctions, so-called Stage 3, would have a large impact on European economies. If Putin orders forces to occupy eastern Ukraine, the West has warned it will reply with punitive measures similar in severity to those used to isolate Iran, and could not only wipe out up to 1/3 of the ruble's value, but could undo 10 years of progress in financial and monetary policy. Adding to the increasing sense of isolation is Russia's suspension from the Group of 8 leading economies in retaliation for Crimea's seizure. This marks a setback for all those market liberalization efforts that Putin was spearheading himself to ensure Russia is a fully integrated member of leading global economic organizations. There's no doubt that Russia has taken a big chance by trying to repatriate parts of the Ukraine in the face of massive Western indignation, and may yet pay a heavy economic price to consolidate its power over the Ukraine. The question is whether the rest of Europe will have to pay as heavy a price to resist those attempts.